Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the definition of the float. As I do in each one of these fundamental analysis tutorial videos, I will give you the exact definition and then we will move on to looking at examples and give you a little bit more in-depth insight. Okay? The float refers to the number of shares outstanding in the hands of public investors as opposed to company officers, directors, or controlling interest investors. Remember, outstanding shares are counting the float as well as restricted shares. So the float is the total number of shares publicly owned and available for trading. The float is calculated by subtracting restricted shares from outstanding shares. And that total remaining would be just the float. And the first question you're probably going to be asking is, where do I get the float information on a particular company? And you can find this information almost anywhere. I'm here on Yahoo Finance page. You can find it on Google Finance. You can find it at your discount brokers. Many different places you can find this information. And what we're going to be doing right now is just looking at a particular company called Drives Incorporated. It's a small cap stock, and we're going to scroll down here and look at the key statistics. Move over here so you can see that. All right, got the tools. All right, here we have the float. Notice that it is different than shares outstanding. Shares outstanding is 380 million, and this counts the float as well as restricted shares. This, of course, the float right below that is 329 million. Basically a difference of about 51 million shares. That tells me, if I simply subtract those two, that 51 million shares are actually restricted shares. So I now know that. Generally, stocks with smaller floats have an easier time making big price moves. That's why a lot of guys will look for small floated companies. This is due to the laws of supply and demand. However, it should also be noted that a float that's too small can work against investors, as institutional investors tend to avoid thinly traded stocks. So that's something else to keep in mind. And now we're going to look at one more company just to show you that not in every case would there be a big difference between the float and the shares outstanding. Let's go look at Wells Fargo right quick. Alright, clear that up. Okay. Scroll on down here so you can see this. Alright. Get the tools out again. Shares outstanding right here, 5.2 billion, and the float, 5.2 billion. Basically means the percent held by insiders is just too small to really even show up there on the radar. So that's something else to take note of, okay? Now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.